Today is Wednesday, May 25th. Happy National Wine Day. I know some of you will like that one. Market's flying again this morning. Dow was up over 200 yesterday. As I'm speaking, it's up 160. It's about 10 after 10 in the morning New York time. So it's a lot of Dow points in the last day and change. Yeah, look at retail. Retail was in the red until very recently. This is the XRT ETF, and it is just barely in the green right now. Take a look at this chart, though. You know, it had a nice double bottom breakout here, nice rally, and then just fell apart. Look at relative performance here versus the S&P. This is actually versus the ETF, but it's the same story. Even at the second peak there, it was just falling while the market was rising and retail just not participating. And now, you know, obviously at a new low relative to the market. Here we have a test of that former double bottom breakout level. So this is pretty nasty. And just for fun, I'm just going to change the chart type. There the moving average is well above price action. On balance volume on the ETF hit a new low recently. I'm going to get rid of RSI here and just put in volume. Look at that. Big volume on the decline, lower volume on this little corrective bounce. So not good looking here at all. Let's take a look at some stocks. I mean, you know what's happened. Macy's and Nordstrom and all those other big stocks just getting crushed after earnings. Take a look at Tiffany, the latest one. Not exactly crushed, but certainly not looking very strong at all. Look at this on balance volume, just tanking. All right, Express. Look at this. This is today. Obviously something's wrong here. American Eagle Outfitters. Actually, all the apparel stocks just look pretty nasty. This one is just jumping around after falling from grace. I mean, it's just awful right now. The averages are heading down, price below that. On balance volume falling. And look at this. Big gap up, and now the stock is fading back into that gap. Not a good thing. Check out Buckle. I have no news on this. Just look at this chart. Just, unless you're a bear, this is one ugly looking chart. And finally, the argument is that bricks and mortar is just getting killed thanks to online. Well, this is kind of a hybrid. I know it's not the most robust of stocks. Land's End, it made its name as a catalog retailer. I know I purchased things from them through the mails a long time ago. They have retail stores as well, but just look at this. It's awful. So while the broad market is rallying nicely, financials having a good day today, just retail is just this nagging problem in the market. And I really don't think that the market, well, the market discounts everything. I think that people in the market are just looking at the surface and the indices, and they're doing well or rebounding a little bit. But beneath the surface, I mean, I've been talking about these industrials and mainline type of businesses in the economy for a week or so, like heavy construction and transportation, not looking great. Look at retail, just terrible.